Hello, my name is Dean L. Hoss, and today I am going to explain to you how you lay out the current assets and current liabilities in the vertical balance sheet. Current assets are those assets which a business holds temporarily. In other words, they are changing all the time within the financial year. The current assets that you need to list in your vertical balance sheet are stock or inventory, debtors, bank, and cash. The stock obviously is the number of toy trains that you have left at that point in time in your warehouse or shop. The debtors are those customers that owe you money for sales that you have made on credit. The bank is your balance at the bank at a point in time, and the cash is usually the amount of money you have in your cash till or in the safe inside your business. The current assets are always listed in order of liquidity. What does liquidity mean? Well, it is simply how easy it is to change the current asset into cash. We list from the least liquid to the most liquid. The least liquid is stock or inventory, because you can't force people to buy your toy trains. You can encourage them, but you can't force them. So if you were looking to raise cash quickly, stock would be the most difficult to turn into cash. It's followed by your debtors, your bank, and then the cash is already available in your till or in your safe. So that is considered to be the most liquid. Current liabilities are similar to current assets in as far as they are short-term liabilities or responsibilities to pay debts. Why are they considered to be current? Well, they are the debts that the company must pay within 1 year. The common current liabilities include creditors. Now, if you remember, the creditors will be usually your suppliers who give you the toy trains and allow you to pay them back over a 3-month period. So their debt is due within 1 year. If you have an overdraft, it's supposed to be a short-term facility. In other words, the bank lets you take out more money than you actually have in your bank account, and your balance in the bank goes to a negative number. Of course, they will charge you a high rate of interest, and you will have to pay them back within 1 year. And in certain cases, a business will take out a loan maybe for a small amount over a period of 1 year. And that would also be considered a current liability. So the structure of the vertical balance sheet will look similar to the balance sheet that you have here of B Swift as at the 31st of December. The first part would show the non-current or fixed assets as we discussed in a previous tutorial. When we add up all the value of the assets we expect to last for more than 1 year, then the value comes to 210,000. The current assets are listed in your first column. Remember, you're going to have 1, 2, 3 columns, and we list them in order of liquidity, with the least liquid at the top. In this case, stock is valued at 3,000, followed by our debtors of 10,000. Our bank balance shows that we have money in our bank of 15,000, and our cash balance is 2,000. When we add together the current assets, they come to 30,000. Our short-term debts or current liabilities are creditors, in other words, the suppliers that we owe money to, and a short-term loan of 4,000. When we add together the creditors of 8,000 and the short-term loan, it comes to 12,000. Our working capital is simply our current assets minus our current liabilities. And in this case, if we had a current asset value of 30,000 and a current liability value of 12,000, then of course when we take away the liabilities in the current form from our current assets, we have a working capital of $18,000. The working capital essentially is the money that we're using to work the business, in other words, to buy and sell toy trains and make us money. When we add the working capital, which is the value of your net current assets, to the fixed assets of 210,000, it gives us the value of 228,000. What does that mean? Well, it's saying that our fixed assets or non-current assets plus the value over the current liabilities of our current assets is in total worth 228,000. Another way of expressing that is saying that we're using assets of 228,000 in our business to buy and sell toy trains in order to make a profit. Thanks for listening. If you found this tutorial useful, then please do wait up for the next video tutorial to load up in the playlist. Remember, you can subscribe to our YouTube channel, and if you did find this tutorial helpful, then please hit the like button.